All right, folks. I'd like to welcome everyone for attending our current issues presentation this morning. I'll be watching the text chat, so if you have questions for the good Dr. Kim Anderson, let me know or type in your questions and I'll pass it on. Also, I wanted to give everybody a quick reminder. We've added a new session. It'll be presented on April the 2nd. We'll be talking about trade wars, tariffs, issues, how that's going to affect agriculture in the U.S. and then in particular Oklahoma agricultural producers. So I'll be sending out a reminder here in the next few weeks of that. So be aware, April the 2nd, same time, 9 o'clock till about 10. And Larry Sanders will be presenting that. Today's presentation, we've got Kim Anderson. He's our crop marketing specialist. He'll be talking about current market situation, summer crops, what's likely to make profits, etc. So without further ado, Kim, take it away. Thank you.
Thanks, JC. Well, I appreciate y'all letting me visit with you this morning. I tried to ponder and come up with something that might be of interest to you and our stakeholders as we progress throughout the spring and summer. And I want to really just go back and look at what's happened and what's going on in crop agriculture. We can start out with a quote from Dr. Luther Tweeden. Now, Dr. Tweeden was in the department back in the 60s, 70s, and early 80s. He retired and went to Ohio State, but he said copying one person's work is plagiarism, copying two or more persons' work is research. So I'm going to present on some research today. And the people's work that I copied was Troy Marshall from USDA NASH. Troy helped me a whole lot with some of the material in here. Of course, Trent Malachek, area specialist in Enid. Roger Sauls, an extension economist here in Stillwater. And then Dave Scheidler, he's a professor in Ag Econ here in Stillwater. I stole from each of these four, and without their help, we probably wouldn't have much material in this presentation. Excuse me. First thing, Troy sent this to me. It came out about a month ago, maybe 6 weeks. It's new. If you haven't seen this, you can find. I've got the URL down there, nassgeodata.gmu.edu/crop space. And they tell me, and I haven't done it yet, but you can actually take this map and take it down to farm level. And what it shows you there is the color codes is for each crop. And then over on the right-hand margin there, if I can get this pointer to work, there we go. You've got the land coverage. It's in acreage, and it's by order, like grass pasture is the highest, winter wheat, fallow, soybeans, cotton, corn, sorghum, etc. You go down through there on your crops of that, and of course you can look at the map of Oklahoma, and right there is basically where the majority of your crops are. You've got some soybeans and stuff over in eastern Oklahoma that you can see along the rivers here, but like Dr. Demono Doy said when she saw this, she says, we need a range specialist because you look at how much of the crop is in grass, deciduous forest, and evergreen forest, and that's the lighter colors over most of Oklahoma. And then we can zero in just a little bit, and you can see, of course, you've got wheat, your winter wheat. Down through here, you got cotton down in southwestern Oklahoma. You can see it coming up in here in northern Oklahoma. The rye capital of the United States. You can see rye production in this area right through. Also, some rye down in here. Of course, we might if we get it down to the farm level, see quite a bit of rye going on. But I thought this just might be something of interest to you, that if you wanted to pull this up and look at your counties or look at your individual farms and learn how to use this tool about what crops are being grown. Also, it's interesting to look at the order by acreage of what is grown and how the land use is in the state of Oklahoma. If to get the outlook out of the way, I'm just using what you can forward contract for right now. If you look at wheat, the basis around the states from about a minus 58 to a minus 40. You can find it above and below that in probably some levels. Your Kansas City or KC July contracts about, I looked this morning, it's around 543, but it's right around $5.40. And using a 50 under basis, you can forward contract wheat right now for harvest delivery for $4.90. I didn't check that just before I got on, but if the market goes up, we did hit $5 one day last week. If you're looking at the summer crops, the basis in most of Oklahoma is around a minus 45 to a minus 60. If you get out in the panhandle, it's probably 10 to 20 cents positive. That December contract's 405, so you can forward contract for corn for about 350. A sorghum on the same contract for about 340. Soybeans, the basis on it is 90 under. That contract, November contract's 1035, so you can contract beans for around 945. Cotton is a guess. The board's around 78 cents, so that gets us around 73 cents for. I don't know that you can forward contract, but it's pretty much an outlook of 73 cents. Canola contracts are around 648, and sesame around 33 cents. I'm going to be using these at the end of the presentation when we talk about the net returns for each of these crops, and I'll just be using this forward contract price. If you look at, I think this is really interesting for wheat. I don't know what in the Sam Hill happened here. Lost my pointer. But anyway, you've got soft red winter wheat at, if you go back to mid-January, the managed traders or managed funds were 142,000 contracts short. They've been buying this week. On the 6th, they were 33,000 short. In other words, over 100,000. What about 110,000? I'd say this is probably down around a minus 20 now. So around 120,000 turnaround, or they bought about 120,000 contracts over the last 2 months. If you look at hard red winter wheat, it went from 20,000 short to 21,000 long. Corn went from 220,000 short. They're probably about 175,000 long right now. So about over a 400,000 contract change are bought in corn over the last 2 months, and soybeans have went from 103,000 short to probably near 195,000 long right now. In other words, about a 300,000 turnaround on beans. And so if you look at what's happening, the market's turning from extremely bearish. There we go, from extremely bearish to for corn and beans, a bullish, and hard red winter wheat, semi-bullish, soft red winter, probably a neutral stance. And so the traders right now are, I think, indicated that they're optimistic for better corn prices and soybean prices. Hard red winter wheat prices, they definitely don't want to be short. They're just close to neutral on that, and they're close to neutral on the soft red winter wheat. Okay, if you look at Oklahoma farm income since 1977, and you look at total farm income, you see it's increased from about $2 billion, went up to $8 billion in the 2013, 2014, and then back down to around $7 billion in 17. If you look at what happened to livestock, it went from about $1.5 billion to $6.2 billion. it got as high as 7. But as a crop marketing specialist, got to get a drink of water here. Crop marketing specialist, around 80, we hit about $1 billion, and we just stayed at that until we got into the late 2010s. Around 2008, we had a little increase up, and then it's been pretty flat and declining, about 1.4 billion. So the increase in a point I want to make is as you look at farm income in the state and the changes in farm enterprises, in other words, the crops grown or the livestock grown, there's, how do I want to put this? It's not a bad thing that crop prices or the crop income stayed flat. It is naturally a good thing for livestock producers that the income increased, but that's could be put as just that's where the profit was. The individual producer is probably not.
Dr. Anderson, I think we lost your audio. Your mic doesn't seem to be working.
When did you lose it?
About 2 slides ago.
Okay, thanks. What happened here? The light's on, so it says it's on. I hate to go back over that. See. Okay, it's hot now. It looks like it. Okay. Yeah. Okay. They think you can hear me now. They said I needed to back up. Go get. Where do I need to go?
Talked about that screen.
Okay, so I'm right here.
You're in that screen somewhere.
Okay. Okay, I'll go over this. Pull that door shut, please. I'm okay now. Oh, I guess I better talk to see if they can hear me. They need to set this thing up so you can hear yourself, I guess, is what they need to do. Okay. I tell you what, you can help me out if somebody will raise their hand out there. See if I can see that. I don't know if I can or not. Oh, there you go. So, okay, good. Well, I'm going to just start talking here. Yeah, I had a raised hand. I actually raised a hand. Okay. All right. I went over this. I don't know where I was. My point is this, is that crop income's been relatively flat over the last 40 years. Livestock income has increased over the last 40 years. This doesn't tell you that the net return to producing crops or net return to producing livestock has increased or stayed flat. I would expect they stayed relatively flat over time as you look at it. It does tell you that that Oklahoma producers are adjusting to change. They're adjusting to the economic stimulus. Also tells you that I'd say Daryl Peel, Dr. Peel's livestock marketing specialist job is a little more secure than my crop marketing job. Then I looked at the harvested acres. As you'd expect, harvested acres have been declining over since '93. You could go back and see that it's relatively flat coming into that. In that incomes stayed the same, and we'll look at production by each commodity. Technology, I think improvements in technology has kept production either flat or increasing, even though acres have been decreasing. And I won't be showing numbers on yield or production day. We're basically just going to look at the distribution of farm assets. And now let's go to wheat. Wheat marketing specialist Kim Anderson is go back to '77. You had your planted acres at just under 8 million acres. They've declined. Of course, this year they're projected to be 4.1 million for Oklahoma. Harvested acres over the same period has also been downward trending, with harvested acres down around 3 million. And so now one thing you can look at on this slide is the spread between planted and harvested. Gives you an indication of stockers and the graze out. Like and of course some of this spread is drought and poor crops, but the general not the story to take from the planted acres and harvested acres in wheat is that there's less wheat acres in Oklahoma. Also tells you that there's more profitable crops out there to allocate your land, labor, capital, and management assets to than wheat. If you look at the wheat price on this slide, I've just got, it's coming flat through here until we got into the 2000s. When you get to around 2005, it's what I call the ethanol effect, is the market was redistributing crop acres between corn and soybeans as we started producing more and more ethanol. We got an increase in crop prices across the board. The producers adjusted, and we built stocks up in 12, 13, 11, 12, and 13, and then forced prices back down in this range. If you're looking for wheat as we get into 18, this is Informa planted acres for all hard red winter wheat. You can see that they've been declining in 16, 17, and 18. The important thing to look at as you look out at price is production of over 1 billion in 16, 750 million in 17, and 687 million in 18. And I think that's why we've seen our forward contract price go from around the low $4 range to right at $5. And that's because production is expected to be, if you look at your average over this period, over say the last 5 years, your average hard red winter wheat production has been around 900 million bushels. If you look at crop conditions, this is from yesterday's or this week's release. Oklahoma had 72% very poor, 7% good to excellent. If you look at this time last year, it was 16 and 42. Wasn't good last year, but it's significantly worse this year. You look at Kansas, 53 and 12. Last year was 23 and 40. And if you look at Texas, 53 and 13, and 20 and 30 and 35. Last year, crop conditions improved as we went through the year, and you can see that Kansas and Texas, which neither reduced their planted acres, where we reduced our planted acres by 9%. Texas and Kansas is going to offset some of our decrease in wheat production. All right, looking at corn. Corn planted acres, running around 140,000 acres, went down to about 60,000 in the early 80s, and then we've been on an upward trend to around 2008. Right here's your ethanol impact, and then we've been relatively flat for the last 10 years on corn planted acres. I put the price on there. This is what I call your ethanol impact here, starting in 2005, as the market was buying acres into corn production. You look across the U.S., I think we went from around 78 million acres to up around 90 million acres over this time period. Of course, we're buying that land from cotton, we're buying it from soybeans and other crops. Farmers are farmers. You give them a good price, they can increase production, build stocks, and that's what we've seen over the last couple years, taking that corn price from averaging nearly 7, and this is your average annual Oklahoma price, by the way, and getting it down around $3. If you look at sorghum, while you had corn acres increasing, you've had sorghum acres increasing from around 750,000 down to 300,000 in the mid-90s, back up to 4 to 5, wallered around, back down to below 3, and then we're now, somewhere between 3 and 4,000 acres, 400,000 acres for sorghum production. Again, sorghum acres sorghum acres are being converted into corn acres is basically what you've seen going on here. Of course, you out in the field know that more than I do. I can just look at the numbers. Again, looking at your ethanol, sorghum tends to follow corn prices, and you can see that, and the sorghum prices are bid off the corn contract, and you can see that it's the sorghum price pattern just follows your corn price pattern. You look at cotton. You go back in the 70s, went from 530 up to over 700. In the late 70s, in the 80s, it goes down to around the 400 level, down around 200 in the mid 90s, wallered around 2 to 300, and then of course the last couple of years we've got this big increase in cotton planted acres. And the word on the street is that the ones who are really optimistic see corn going to 700 million acres. Not corn, but cotton going to 700,000 acres. I'll get it right here in just a minute. 700,000 acres this next year. I personally would be surprised because it's not just U.S. producers that react to price, it's producers around the world that react to price. And farmers have a good habit of, if there's profit in it, they follow the herd and chase that profit. If you look at prices for cotton, you can see it with price over here on the right-hand margin. Down around the 40s in the late 2000 time period, back up into 90 in 2011, down to 60 and up around 70. It's up around 70, 72, 73 right now, and that's about what we're looking for the 2018 crop year. But higher acres, and if we get higher acres around the U.S. and around the world, I'd expect that price to go down rather than what the market's offering now. Soybeans, now, I'm going to throw this out now. If you look around the world, there's a shortage of two things. There's a shortage of protein, both in the food market with wheat, and in the feed market. No, you didn't lose me again. I just got filled up my water cup. If there's a shortage of protein around the world, both feed protein and food protein, and that's why I've been talking about with wheat, the protein premium for wheat for this harvest, and it's going to be in the basis. And in the feed market, there's a shortage of protein and there's a shortage of vitamin A. There's the vitamin A shortage is greater than the protein shortage. Now, I don't know what in the Sam Hill you raised to get vitamin A, but if you can figure that out, there could be some money to be made in getting vitamin A. But again, soybean acres increase. I think that soybean prices are going to hold given that shortage of protein around the world. And also now part of this protein can be picked up with cotton and cottonseed meal. Looking at the soybean price, again, you're bidding land. Corn's bidding. Corn market's bidding for land. The soybean market's got to keep land and soybean production. So they bid it up to near $14, and it's came back down to this $10 level. And we're running in the nines, right at 10 as we look into 18. Peanuts. You look at peanut acreage, you go back to 77, 120,000. This is probably your base acres. Coming down to 80 to 100. You get in the early 2000, and then it just dives down to around from 80,000 to 100,000 down to around 20,000 acres of peanuts. You can look at your price on here to see what's going on in price. But peanuts, it looks like they pretty much left the state. So I put it all together here so that you can kind of see what's going on. You got your 1,000 acres over here on the margin. Peanuts, downward trending. You can go sorghum, the red, downward trending. Little pickup in the last few years, and this is probably basically because of China. And what happened in China was China put an import tax on corn coming in so that they could increase corn production. And when they did, the Chinese, they're as smart as anybody else. They said, well, if you're going to put an import tax on corn but not on sorghum, we'll import sorghum. And so you'll recall that the sorghum basis went from about 20 under the corn basis to about 30 over. So you had about a 50-cent change in sorghum. U.S. producers, Oklahoma producers reacted to that higher price. And, of course, you got the sugar aphid here with the lower acres in the sorghum. You got the green, the soybeans coming through here. The increase in soybean acres. You got your corn acres coming through there. But you can kind of see the cotton acres, the big increase in it. You can kind of see what's happening into Oklahoma crop agriculture here in this one slide. If you want to sort or work your way through all of these different lines. If you look around the world, I've got wheat acres. These are in millions, so you're running 570 million acres. Get down to almost 500. Pretty downward trending to flat. Especially along the latter years, the last 10 years, flatted world. If you look at corn production acreage, harvested acres around the world, you've had an upward trend since the early 90s going through there. You look at soybeans, you've had an upward trend in soybeans over the entire 40-year period here with a little steeper increase in the last 20 years. Sorghum acres just flat. And cotton acres just flat. Now, if you look at production, world production, now I'd have to pull out what units I've got the cotton bales in. You got the sorghum, corn, beans, and wheat in billion bushels. I got 400. I don't know what unit of 480 bales there. I noticed that when I was going. But the cotton production increasing into the late 2010s. In other words, right here you're around 2005, and then pretty much flat across here, which just changes due to the weather. You look at sorghum in the world, just flat. You look at soybeans, increasing production from 91, a slight increase up through there. You look at wheat, flat until you get into about 2003, then increasing wheat production. Now put them side by side, and so you look at world cotton acres, it's just pretty flat. This is increasing technology here. That's what technology can do as it's implemented around the world. That's pretty much. Now it's been flat since the early 2000s here, but that's changing. So you got flat sorghum, you got soybeans. You've had increase in harvested acres, increase in production. So not a lot of change in technology there. You got wheat. Declining to flat with increasing, so better technology there, better varieties, better technology. And as you look at corn, increasing corn acres and increasing production. And we know we've had improved technology in corn. And this just kind of tells you what's going on around the world, and crop agriculture is a world phenomenon, and our price is determined on the world market. Canola, I needed to throw that up there. I haven't talked about it. This is Oklahoma. I just had the numbers from 2009. This is USDA numbers, and I know some people in the state think that these planted acres and harvested acres may be low. I'm just using what's published. You got the planted acres in red, and you got the harvested acres in green. And as I retired economist, the spread between the red and the green pretty much shows me the risk in raising canola. The agronomist can address this better than I can, and some farmers I know are better than others. But this pretty much shows me the risk. Looks like you had a couple years of weather phenomena here, and maybe the learning curve as that spread tightens up here. The learning curve on how to manage canola is probably improving. You can look at the canola price. I've got it chastised by some people in the industry before, but in my opinion. Now, the canola prices around the world were higher in 11, 12, and 13 in this period here. But also in Oklahoma, we had the producers' cotton oil that was processing canola, and we had the talk of putting in canola plants. And I think the market was trying to buy canola acres in Oklahoma. And I know this, if you look at the basis off the canola market in Canada, your basis was about $1 under Canada, where down in here it's $4.50 to $5.50 under that market there. And so I really think that this $12 canola price was a local thing. The price is running around $6.50 a 7 right now, and that is probably more. I know I've been predicting $7.25, $7.50 canola prices as we get into harvest. Right now, you can forward contract for around $6.50, which is about where this market is. We'll just have to see where that stabilizes. I'm a supporter of canola. I as an economist and looking at quality as well as quantity of production, you cannot have a market as we've seen in wheat this last year, with our price averaging around 90 cents less than the U.S. average wheat price, and that's simply because we don't have protein, and you look at past years where we don't have test weight. I think you've got to manage quality. So this kind of a summary of the harvested acres over this time. You've got wheat about 15,000 less acres. You've got corn up 5, sorghum up 59, soybeans up 25, cotton up. And now these are the 5-year averages for from 2012 to 2017. Is what we're talking about here. Cotton, the 5-year average is up 67 million. But if you use the 5-year average in 12, or you've used the 12, in 12 we had 140,000 acres, 296, 415 in 17, a 296% increase. Oh, these are percentages. 50 minus 15 down, 5 up, 59 increase, 25% increase, 67% increase. Or if you look at a 1-year deal, it's almost a 300% increase. Hay, about an 8% increases in acreage. And so this is kind of a quick and dirty a way of looking at what's our land allocation, our farmland allocation over the state. Trent Malachek and Rodney Jones helped put these budgets together. We used wheat at 35 bushels. Earlier we had $4 price for wheat. Right now you can forward contract for $4.90. So if you look at 35 bushel and a variable cost, you're looking at $21 over that. Your return over fixed is right at break even. If you look at canola at 30 bushels, I put in the forward contract at 675. The return over a $13 an acre loss or $39 an acre. Corn at 80 bushels at 350 is 14 over variable, 13 under total. Sorghum at 50 bushel is 7 over variable, 20 under total. Soybeans at 25 bushels, 26 over variable, 19 over fixed. Peanuts, you people in peanut area know more about this than I do, but it looks very profitable. And cotton looks good. Okay, we've got, I'm just going to look at the seasonal drought outlook now. You've got, there's my arrow. I think this is good news. This is, February 15 to May 31, where we've got a new one of these coming out in the next couple of days. But it shows improvement in this area. Of course, this is a month ago, and a lot changes in the month. But it shows, just continued persistent drought. It remains, but improves a little bit in the majority of the state. If you're looking at the drought and where U.S. winter wheat is, your drought areas, here's darker green. Look at the spring wheat areas. You're in good conditions there. And if you look at the spring wheat area up in here, and the shortage of protein, this tells me if this holds. Now this is just gets us into planting time. But if this was to hold throughout the production year, that would make protein. If we can get protein in our wheat down in here, it makes it even more valuable. If you look at the corn areas, it's mostly good for this production for this next year. If you look at soybeans, it's the same. Drought pretty much not impacting that. Now, I want to shift gears just a little bit. This is a growing area of our allocation of our assets is certified organic in Oklahoma. And if you look at the number of farms in 15, we had 23, and in 16 we had 34. So a significant increase on a percentage basis, a significant increase. You look at the total acreage from 6,000 to 18,000. From going from 15 to 16, so that's a big change in acreage. You had 29 farms with crop sales, 5 with livestock, 4 with livestock or poultry sales. This is from this information. Troy Marshall did a fact sheet, and you can get that fact sheet from USDA NASH. Troy is the USDA NASH representative in Oklahoma City. 13 growers on 7,000 acres sold over 2 million. Soybeans 863,000, wheat 687, hay at 456, all cattle at 457. You look at vegetable grown, 14 acres from 13 farms. Now this is just kind of mind-boggling to me, but tomatoes 73,000, squash 24,000, potatoes 19,000, lettuce 17,000, cabbage 15,000, berries and other fruits 96,000 from 8 growers, and eggs come in at 99,000. Now, okay, shifting gears. This is it. I don't know about you. This just if I was out as county educator. And I'm sure you already are aware of what's going on in your county, but this seems to be a growing area and an area of some potential for programs. Now, I get intrigued by this chart. And now, I took 2 charts from the Oklahoma Climatological Survey, one with precipitation and one with temperature. And I overlaid them. These are separate. When you find them on the internet, and just go to Oklahoma Climatological Survey. Or I think you can get to it from Mesonet, but it goes back to the 1800s through the 2010s. You got above average precip and below average precip in the brown, and above average temps and below average temps. That box there is a 40-year time period from the mid-1950s to the mid to late 1990s. And look, I mean, you had almost 40 years of below average temperatures here. You look at the end of it, you had 20 years almost of above average moisture. You can go back and look at the length of years for below average moisture coming in those time periods. You can go back to another 40 years here where, I'd say the majority of the time you had above average temperature and overall below average moisture. I don't know what you can draw from these charts, except that predicting weather is worse than predicting prices. I know when I started this job in the 80s, early 80s, 1982, the producers told me, Kim, if you'll tell us what the weather and price are going to do, we'll take care of the rest. So this is just something for you to look at and to evaluate. Of course, we've had above average temperatures now since the late 1990s, but moisture has been, some above average, slightly below, above average, drought, above average. So it's just something for you to look at, to think about, and as people get all excited about the climate change, look at this chart and draw your own conclusions. One last thing I want to look at is farm size. This is U.S. As the census is being sent out for the in 2017, I think we need to stress to our stakeholders that we need them to fill out the census and fill it out accurately. That without this, and not just the census, that the 5-year census, but the timely census that we get, that farmers fill out on production and acreage, because without that information, the large players have a significant advantage over smaller players because they have better information, and information is power. But this shows you you've got 87, 92, 97, 2002, 07, and 12. 50 acres or less, flat over the end of it, but slightly growing. 50 to 200 acre farms declining. 200 acres to 1,000 acre farms declining. 1,000 and 2,000 pretty flat. Above 2,000 acres increasing. This pretty much tells you what's happening in agriculture, and I would guess that maybe the greater than 2,000 acres in Oklahoma may not be, you may have increases in the 1,000 to 2,000, but it tells you that to survive in agriculture today, you pretty much, you've got to control the acres. If you look at the, again, this is from NASS, Oklahoma Ag Statistics, NASS. You look at the feed cost, 2012 to 16 by year. That's just your high crop prices and prices going back. Livestock and poultry prices, they increase back down. This is the drought years, the cattle. You look at, and now this is, you've got seed. This is for Oklahoma. Seed, electricity, pretty flat. Fertilizer, slight changes at declining over the last 3 years. Pesticides, slightly higher, flat over the last couple of years. And fuel and oils peaking out, around 13 and declining. And so you can kind of look at your cost of production. Once you got into 2012, it's been pretty flat. Your pesticides a little higher, maybe offset by your fuel and oils. That's I've covered quite a bit there, just to put out for you to peruse, to look at your individual counties or individual areas, kind of an overview of what's happened in crop agriculture. I didn't spend much time on outlook because we know that just about for all grains you've got excess capacity, except maybe for cotton and soybeans, but those stocks are relatively high too. So I'm going to stop my presentation now and see if there's any questions out there.
Do we have any questions for Kim?
Okay. If there's not any questions, I'd like to finish up by saying there's change going on in agriculture. There's always been change going on in agriculture. The markets change, the weather changes, technology changes. We quit producing. The sorghum acres went down dramatically because of the sugar aphid. What we have to do is be at the cutting edge of change and to be proactive rather than reactive to the change. We know that we need to reallocate sources, especially in marginal land, as it goes from, say, pasture or hay to crops, or back from crops to pasture or hay. We need to work as a team. I know as a state specialist here at my Ivory Tower office, I cannot operate without input from the county educators, from the area specialists, letting me know or keeping me involved in what's going on in the county. I want to put in an advertisement for NASS and USDA for, I think in every one of our programs, we need to emphasize that those surveys that NASS sends out they're confidential, but that I'm doing some of these yield and production analysis I do by county. There's some counties that are big wheat counties or corn or whatever that don't have corn production for certain years because not enough producers fill out those surveys. So we need to stress the importance of the information and the importance of USDA and NASS to keep support for them and to keep producers filling out those surveys accurately. With that, JC, I'll turn it over to you.
Thank you. Great job. Are there any questions for Kim? Well, I would like to remind everybody that we'll do a special edition on April the 2nd, talking about trade, tariffs, barriers, etc., impact on agriculture and Oklahoma ag. And without any questions or anything being typed, I thank you for attending today. We'll see you next time. Thank you very much. Thanks, Kim.